Okay, Kate, do you have another speaker lined up for me?
Yeah, we've got Jeffrey Gibby here.
Hey, Jeffrey, how you doing, my man?
Hi, John. Good to hear you. Can you guys hear
You're
me
you're out
okay?
of Las Vegas, aren't you?
Salt Lake City.
Oh, Salt Lake City. I bet it's cooking over there today.
It's nice and it's not too bad. It was definitely warmer this weekend. We had a nice little storm come through and cool things down.
Oh, lucky you. Boy, what we would give for rain here. We had a tremendous heat wave which started here and then moved east across the country. And no rain. Boy, rain is just an unheard of thing in California these days.
Yes, it
Uh,
is. Yeah.
Jeff, let me give you your introduction. Jeff has been working in the industry so long, I can't even remember. He's been working for Metastock for 16 years. He's currently in charge of new business development and works to create new Metastock distributors and partners worldwide. Mr. Gibby works with training companies to help people learn the power of Metastock. He has spoken to traders from around the world and has trained people on how to use the software and trade various markets. Among his areas of responsibility are the management of new products and services for Metastock and creating strategic partnerships. So Jeff, I can't remember when the last time I saw you was. I think it was like 10 or 15 years ago in Las Vegas at one of those conferences. Back in the old dinosaur days when people met in person. Do you remember
Yeah.
that far back?
The before times? Yes, I remember the before times.
Yeah.
Yeah, so-
Those were fun, but the people who ran those conferences, they didn't make very much money. I mean, the Bellagio used to just charge you an arm and a leg to have a conference.
Mhm. Yeah, for sure.
It was the new forum is a lot easier for us to get together. You can bring together people all from all over the world at no cost, which we do ourselves every 3 months. So
Yeah.
Jeffrey, time is yours. I'm going to mute myself. You have the floor until 5 minutes before the hour, where we will break in and then award more of our $100,000 in prizes for the week.
Can you help me with two things? I just have
Sure.
two questions for you real quick. I want to verify that you can see finding the right strategy for Metastock right now.
Not only that, but I see you too.
Hi.
You obviously
Also,
know how to work this better than I do.
yeah. Also, can you see Metastock now that I've switched over?
Yeah. You got a chart
Awesome.
up here, and that is for
S&P today.
the spiders.
Yep. All right. Thank you, John. I appreciate the help. And the
Horrible
invite.
chart, by the way. I wouldn't touch that with a 10-foot pole.
Yeah.
Sell
Okay.
rallies. Okay, I'm going to mute myself, and you have the floor.
Awesome. Well, thanks for having me. I always like to come in here today or anytime invited. So thank you for having me. I want to say thanks to Kate for helping set everything up and John for kind of inviting me to come in. My name is Jeff Gibby. And as we get started, I want to remind you that today's demonstration is a design to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock should have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. I'm going to just get a little bit more comfortable. If they need to talk to me, I'll be able to hear it still, but I do like to take this out. I want to let you know I can see the questions. So if you do have questions, feel free to kind of type them in. And I've already got one from Jeremiah that I'm going to answer. So Jeremiah, thanks for the question. As I said, my name is Jeff Gibby. And Jeremiah wants to know, is Metastock available? Can you use it to trade cryptocurrencies? And the answer is yes, actually. We get all of our data, as you can see right here, from Thomson Reuters. And in fact, we cover only about like 300 different exchanges globally. We also have Bitcoin and Ethereum, quite a few of the coins available as well. But one of the things that's been hugely advantageous to us is the fact that when I started, just to kind of give you a little background on me, I started here at Metastock 25 years ago as of March. And it's a great company to work for. I absolutely love it. I started in inside sales. Did that for about a decade, and ever since then I've been doing both in charge of our sales and in charge of the partnerships. So I do a lot of webinars as a result of that. But it's been a great company to work for. When I started, we were owned by Reuters, who then became Thomson Reuters, who then sold off to Blackstone, and now it's actually part of London Stock Exchange Group. We have a great relationship with them still, the guys over at Refinitiv, but we own ourselves, and we've been doing a lot of development on the software and a lot of things that we want to do. But we do have a really good relationship with LSEG and the guys over at Refinitiv. And so in addition to the Metastock program that I'm going to show you today, we also sell their institutional quality data service that they've put over $1 billion in. So I don't want to spend a lot of time on me today or what the company is, but one thing I will tell you before we get started is, I'm just looking at the questions. I can't see very many of them. I'm going to try and adjust it. One of the things that we're really, really proud of here, and one of the things that I like to bring up over and over and over again, is 29 years in a row, Metastock has been rated the #1 software by the readers of, not the editors or not the people that are selling marketing, but the readers of Stocks and Commodities magazine. So it's around doing technical analysis. We also do some really good fundamentals and things like that. But today what I want to actually talk to you about is technical trading. And so actually, let's go ahead and advance the slide. Today, the agenda is simple. I'm going to stay out of PowerPoint a lot. I have a few slides that we're going to look at. But what I want to do is talk about the importance of having a trading plan. I think it's really, really important to have a trading plan when you're trading. One of the studies that we like to cite when we kind of go and do in-persons or online events is, and this is a question I'll ask people, and I'm going to ask it to you guys as well. What do you think the best profession is to have before you start trading? And I'll let you answer that in the chats because I'm interested to see what you have to say. I'm going to answer that question for you guys in just a minute. But if you have a guess in terms of like the best profession, whether like it's a psychologist or like a school teacher or an engineer or whatever, just post a guess in the comments. I'm going to teach you MACD. I'm going to teach you how to trade with MACD. I'm going to teach you how it's calculated. I'm going to teach you a trading plan. And the reason I do that, I'll give you a couple of reasons as we get going, but the reason I like to talk about MACD is I want you to understand that trading doesn't necessarily have to be complicated. It can be very, very simple. And the reason that I picked MACD is, well, it's simple. A lot of people trade with MACD, but they have no idea how Gerald Appel calculated its initial indicator. So I'm going to go through and show you exactly how MACDs are calculated, how you can get a signal line off of it, how you can get bullish and bearish readings off of it. And then I'm going to show you how you can kind of automate that as a process. I'm going to teach you the three main ways that you can use MACD in your trading. And hopefully that's helpful for you. Obviously, there's hundreds of indicators. We're going to talk a little bit about the trading of the testing of trading ideas and how that can work. I'm going to show you how you can scan using Metastock to find trades that exist today. And I'm even going to give you at the very end like a special offer. So there you go. We do have one guess on my initial question, and that is, I want to get more guesses. But what is the best profession to actually trade? And AN says it's fighter pilot. I'll tell you if he's right in just a second. And that's an interesting answer. Kate says great, or Lipping says great. Thanks for all the efforts and the great webinar. You guys are awesome. I agree. You guys are doing a great job and I appreciate being invited. So let's get started anyway. So the only answer that we got so far in terms of the actual profession, the best profession for trading, AN guessed it. Actually, it's not a fighter pilot, but it is a pilot. And it's kind of interesting because I've worked with a lot of experts over the years. A couple of them that I have great respect for is Dr. Alexander Elder and Jake Bernstein. They both started as psychologists. And Dr. Elder has a pretty good story about how he actually smuggled his way into the US, and he's a very, very good technician. But also Jake Bernstein. was started as a clinical psychologist. Both of those guys are world famous traders, but fighter pilot or pilot is the right answer. And in fact, a couple of the people, let's see, Chuck Hughes does a lot of education in the market. He's a pilot. Also, who was it? Greg Morris, who is a person that we did a lot of work with, but he's retired. He actually managed a $13 billion fund with Stadium Money Management. He was a fighter pilot. Fighter pilot is actually the correct answer in terms of the best profession to have before you start trading, according to this article I read 20 years ago. But I've thought about that over the years, and I kind of wonder why that is true. I believe it's because pilots are more disciplined. In other words, when they take off, that's a great guess, unless you already heard it or knew the answer. It's a really, really good guess. But I've always thought about really why the reason for that is. And I think it's because when they take off, they have an exact checklist. They always follow that checklist. When they land, they have a checklist, and they always follow the checklist. They have a very, very disciplined approach to trading. So you probably read the quote on the screen already from Richard Dennis. If you're not familiar with Richard Dennis, he's got an interesting story all of his own. I have some notes here, but actually I didn't keep them. He was a very, very famous trader in the 80s. And he actually turned $5,000 into over, I think it was $100 million. It's actually in my notes, but I didn't actually kind of write them down. But he was very, very famous as a technician and one of the very famous futures traders. He had a business partner. That business partner's name was Bill Eckhart. And they had a disagreement. Richard Dennis thought, okay, what we do when we're trading is not really that special. We can actually teach people how to trade, and as long as they have discipline, as long as they have consistency, they're going to be able to duplicate the exact same results that we are. And remember, this guy's a very, very celebrated, huge trader, very famous at the time. And so Bill Eckhart actually disagreed. His business partner at the time disagreed with him. He said, well, no, certainly people wouldn't be able to tolerate the risk, and it's very genetic, and people just wouldn't have the right risk tolerance. It takes a very, very special kind of mentality to trade, and it's not something that you can be taught or is teachable. So they had a disagreement about that, and they decided to settle it with a gentleman's bet. And the result of that was what they called the turtle traders. And basically what they did is they put ads out. I think they put the ad in the Wall Street Journal, and they actually recruited about 14 people that they initially brought in, and they just taught them trading rules to trade. If you're familiar with the turtle trading system, it's a breakout system. So if a stock was trending and broke out, they'd buy. Generally, they were futures traders, so they were primarily trading futures instrument. If it broke down below kind of their turtle levels, they would go ahead and short, and they would pyramid into positions. But it was very much a breakout system. It was very much a trend following system. And the strategy that they built with the traders that they recruited and that they funded was insanely successful. And I'm going to look at my notes real quick because, they had an aggregated profit within 5 years of about 175 million for all of these people that they had traded. And what he said, I had to go to my notes, but what he said as part of that is, I always say you could publish my rules in a newspaper and nobody would follow them. The key to trading is actually consistency and discipline. And there we go, back to the fighter pilot again. So thanks for that answer. What we're going to be talking today about primarily is trading rules. Okay, and I love trading rules in general. Or trading rules in the market. Generally, there's tons and tons of indicators out there, but I view them as kind of putting together like a business plan around trading. Like if you were going to go and invest money into say a Subway or McDonald's or a franchise, you're going to want to have an idea of how much your product is going to cost, how much your marketing is going to cost, how much profit is available, and you really want to be able to understand your numbers. And most business people that kind of invest heavily into a franchise model or into a business of any kind, they're going to have a really, really clear understanding of their drawdowns and kind of their profit potentials and that kind of stuff. It's amazing to me how many people just go into trading and they're going to listen to the Uncle Bob, who has a little bit of success in the market, or just follow the crowd or follow the herd, with systematic trading, what you have is the ability to kind of have an idea of why you're going to buy, when you're going to buy, and exactly you can also test that and understand it. So as I said, we're going to start with Gerald Appel. This is a picture of Gerald Appel. He's the designer, the inventor of the MACD. I'm going to kind of show you how easy it is to kind of have a business model, how easy it is to actually test a business model. And we're going to do that all in my software, Metastock. I believe this is the last slide for, oh, no, there's one more slide. There are a few reasons that I picked MACD. At the time where I kind of created this, it was our most popular YouTube video that we've had out there. A lot of people have interest in the MACD. I've talked to a lot of the MACD, a lot of customers and clients over the years, and a lot of them use MACD, but they don't know what it's about. And so those are the reasons I picked MACD. It's also pretty simple once you understand kind of the rules and kind of what Gerald was looking for in those rules. It's pretty easy to follow. It's very, very objective. You're not making guesses based on interest rates and what Jerome is going to do tomorrow and that kind of stuff, or what Corona is going to do, or what the stimulus is going to do, or what the housing crisis is going to do, or whatever. So the thing I like about technical analysis is you can keep it objective. The MACD by definition is a trend and a momentum system. So I'm going to show you how you can use MACD to see if the MACD is giving you bullish trends and if whether or not it's giving you bearish trends. And you've heard it, it's also going to measure momentum. I'll talk a lot about that as well. But a lot of times people say the trend is your friend, or befriend the trend, or, it's a cliche. I'm going to show you very specific ways to measure the trend. All right. I don't see any questions so far, so we're going to keep moving. And we're going to take a look at the time because I'm not going to go over today. Kate will get mad at me, and I don't really want her to. All right. So for now, what I want to do is I'm going to actually take MACD off the chart. I've just pulled up a chart of the S&P 500, which is ugly, as John had said earlier. But what I want to do is actually show you how to calculate a MACD, or how MACD is calculated. Now, I've just got a bar chart up, and I'm just taking the indicators off, but I'm going to add them back in. I just want to show you how to add them, how easy it is to add them. So with Gerald, one of the things to note as we kind of get going, he didn't use whole period EMAs. He used a 0.75 and a 0.16. And that's a little bit beyond kind of how deep I want to go into the math. The closest whole number period-based exponential moving averages that he used in his calculations were the 26-period exponential moving average and the 12-period exponential moving averages. So keep in mind the calculations that he used were slightly different, but they're going to be pretty close for what our purposes are today. The first thing I want to do, though, is I want to apply the 26-period and the 12-period exponential moving average. So let's go ahead and grab that. This is Metastock. I'm going to go ahead and click right here. And this right here is our indicator quick list. And there's kind of a few hundred indicators that come as part of Metastock. So anything that you might be interested in is going to be there. One of the things I like about Metastock, if there's indicators that you use quite a lot, they're actually going to keep track of them and put them at the top as part of a most recently used list. So I could find moving average down here, but I could also find that up here because I just used it. It's recently used. So what I'm going to do is I'm going to actually drag and drop this indicator onto the chart. And we're going to put a 26-period exponential moving average and a 12-period. Okay. We're going to go ahead and click on 26. We're going to go ahead and make it exponential. And we'll leave, red's fine. I'll make it a little bit thicker so you can see it on the internet. I'm going to do the same thing with the 12-period exponential moving average. So here, we're going to go ahead and do 12. We're going to do exponential. I'm going to make it a different color just so that it stands out from the other one. And I can reference it as a blue line instead of a red line. And we'll go ahead and do this. So that's it. Got the 12-period. Right here, I got the 26 exponential moving average here. And I'm going to go ahead and add the MACD indicator and just explain how those indicators go into the calculation of the MACD. Okay, so what we're going to do here, back to the quick list, I'm going to grab the MACD with histogram. I'm going to explain all 3 lines to you. And I'm just going to drag that and drop it onto the chart. Okay, we'll go ahead and click OK. Actually, I do want to change this a little bit. And again, anytime I want to change something, I can just double click on it. I actually, I prefer this to be a filled in line, and just bear with me because I like it better this way. We'll go ahead and click apply here. See, it's pretty, right? Okay. So now The histogram that's right here was actually popularized later on by Linda Radke. It was added later. Initially, Gerald was just working with the red line and the blue dotted line. Okay, I'm going to move this to the top because I'm more used to having it at the top, so I'm just going to drag it up there. And if I basically, to calculate, let's start with the red line first. To calculate the red line, all I'm going to do is take the value of the longer term 26-period exponential moving average and subtract it from the blue line. So I'm going to take the longer term moving average and subtract it from the value of the shorter term moving average. And that's basically what's going to give me the MACD value. Or to put it simply, if I subtract the blue line from the red line, I'm going to get this red line up here. Okay. And that's really basically what it's looking at, is looking at the difference between a long-term moving average and a short-term moving average. And that's how we kind of look at it in terms of bearishness and bullishness as well. If you understand that, you'll understand that if the price of the S&P, which is what we're looking at right here in this chart, is moving down, which has been, your shorter term moving average is going to be below your longer term moving average, and that's going to give you a negative value on this red line. That's all you're looking at. The faster it's moving down, the more negative that value is. Okay, so it's looking at that can kind of give you an indication of movement. If things are moving down quite quickly, then you're going to have a deeper MACD value. Okay, then if they're kind of more sideways or a less of a pullback. So it's a good measurement of momentum. So just to recap, and I repeat myself a lot, hopefully it's not too annoying, but like if I subtract the value of the shorter term moving average from the value, or I'm sorry, the longer term from the short term, the red line from the blue line, that number is going to be negative because it's going down. The stock market is going down in value. And it's going to be the value we're going to get is going to be plotted as this MACD line, the red line. Okay, so that's the MACD value. It's just the difference of those two moving averages. That's it. Okay. The blue line right here is quite simply a 9-period exponential value, or a 9-period exponential moving average of this blue line. Gerald called it the signal line. And pretty much if it's trading above its signal line, it's bullish. If it's trading down below its signal line, it's bearish. Okay, so right here, if we're looking at right now the MACD, say, okay, well, right now it's trailing down below its signal line and it's bearish. Okay, it's also called a signal line because it's the first way you can use MACD. I'll come back to that in a second because I promised to talk about all 3 lines. I'm going to do that real quick. This blue line, Linda Radke added, and it just shows the difference between this line and this line. So that's all it is. You can either look at the signal line or you can look at the difference between the 2 values. If this crosses down below a signal line, it's going to cross below 0 because the values are going to cross that signal line. So to recap, the red line is just these 2 moving averages subtracted from each other. The signal line is called a signal line because you can use it as a signal, but it's a 9-period exponential of this value. And then the blue line is just the difference between the red D MACD and the signal line itself. Okay, that's it. Is that clear for everybody? I don't see any questions, so I'm going to assume that I explained that well, or you already knew it. Well, either of those are acceptable answers to me. Okay. Now, the reason that they call this blue line the signal line is when it goes down below the signal line, when the MACD crosses down below the signal line, as it did right here. I'm going to go ahead and zoom in on this a little bit so you can see it. Okay. When it crossed down below that signal line, it went into a bearish state. Okay. And this happened right here. Okay. And you can see right here, it actually has kind of dropped pretty precipitously in the last couple of days. If when it crossed up above its signal line, it went into a bullish state, which you can see right here. Okay. Again, we can go back here. Here it crossed down below its signal line and put us into this real big bearish territory. And that would have been right here. That would have given us a bearish signal right here. Okay. And one of the things that we've got in Metastock is we do have the ability to actually draw this for you. I don't have to draw all these lines on here. And what I'm going to do is attach what we call an expert advisor to this chart just to kind of help me illustrate exactly what's going on. So what I'm going to do is I'm going to click on this guy. He's got a bolo hat. As we all know, experts wear bolo hats. And in here, there's about 40 or so different experts that can kind of identify different stuff on the chart. And if I go down here, actually, there's more than that now. We just added 56, so there's like over 100 of these. But if I go down here, there's a Bollinger Bands that you can attach. And the one I'm obviously looking for is the MACD one, but there's all kinds of stuff. There's one in here that's really cool I like to show when I have some time that actually shows all the single-day candle patterns and explain what they mean. But for the purposes of this demo, we're just going to find that MACD by Metastock, which is right here. I'm going to attach it to the chart. I'm going to go ahead and click on close. And you'll see that as soon as I do that, you're going to get the switches. It's going to tell you if MACD is in its bullish phase, which it was right here, or if it's in its bearish phase. So the first way of the three ways I'm going to talk about in terms of analyzing the MACD, the first way is it trading above its signal line? Is it in a bullish phase or is it in a bearish phase? And you can see I actually did a better job of actually labeling that on the chart, because right here it says, okay, we crossed up above the signal line. It gave us a buy signal here. Here it gave us a sell signal. Okay, here it gave us a sell signal. And we can kind of very, very visually go back if we want and kind of see here was the last buy signal. Here was the last sell signal. And these are just generated but very simply by whether the MACD is crossing above or below its signal line. So I also like this quite a bit because I have the ability, let me zoom back in a little bit here, to understand how this works, on S&Ps. Okay, so for example, let's scroll in a little bit, which I'm going to do with my mouse. Scroll all the way forward in the data. If I could come in here and say, well, if I sold here and I bought here, how well does that work? Okay, and obviously with that signal, that's actually going to be a really, really good signal. We had a huge precipitous drop, right? If we would have bought here and sold here, we're probably going to be down a little bit. If we would have shorted here, so far we're happy. We don't know how that's going to work out, but very, very objectively, just using the first rule, I can understand exactly where my entries are, why I'm getting in, and it's objective process, not a subjective process. Doesn't work all the time. Probably isn't the best indicator to use, but it's helping me understand that. So the first thing that we're looking at again is that signal line. That's the first way that you can look at the price. The second one is the momentum, because remember we talked a little bit about a momentum, and the thing that you can look at is for MACD is when it gets to an extreme overbought or oversold value. It's actually going to be an indicator that you can use as an overbought, oversold indicator. But there's some caveats with that, which I'm going to kind of talk a little bit about. So I'm just trying to see if on this chart we had any of those super high readings. I think so that they'll stand out a little bit more to me. I'm just going to actually put this to a black and white chart. So I'm going to actually just change it to black so I can kind of see any highlights that are on the chart. And you'll see, I'm not seeing any terribly overbought or oversold readings, although it might be a little bit oversold. What I'm going to do right now actually is kind of look back a little bit further in this chart and see there is a color highlighting that happens when it starts to see something as traditionally overbought or oversold. Not seeing it on the chart, it's not that important, but it will warn you when that happens by giving you a color-coded bar. Okay. One of the other things I want to talk to you about is the expert commentary real quick, because the idea behind the signals is to understand how you use them. If you want to understand if you understand how you're trading, I think it'll be helpful to kind of understand why you're trading as well, and kind of the reason that you're getting methodologies. Open up this expert commentary. When I do, you're going to notice that it gives you a little triangle right here. And yesterday we did get a sell signal. Back here we got a sell signal, as we kind of talked about before. But as soon as I open this commentary, it's going to give me a definition of what's going on in the chart. So right now, the things that it's looking for is bearish. Currently the MACD is bearish since it's trading below its signal line. It's been doing that for one whole period. It crossed over yesterday. Since that, the actual price of the S&P has actually decreased 0.31%, and it just ranged from 381 to 372. Okay, right now the MACD is not in an overbought, oversold range. If it was, it would give you some instructions. One of the things that would tell you, which I think is important when it says it, whether or not something is overbought or oversold, or in an overbought or oversold region, is you shouldn't trade just because you get an overbought or oversold reading, because generally when something's overbought or oversold, you're trading against the trend. And what you want is a confirmation that at least there's going to be a reversion to the mean type of an activity. And there's some language that says that, hey, this is overbought, but be careful because you want to have some sort of a confirmation that this is going the other way. As we know from watching markets, stocks can stay overbought for decades. That just because they're overbought doesn't mean they're going to not keep going up. You want a confirmation in place. And so it does tell you about that. The third thing that we're going to talk about is actually the divergence in MACD. And I'm going to draw a couple lines on the chart. And before I do that, I want to talk about divergence in such a way that I think it's an important concept to look at. In fact, Alexander Elder, who wrote Come Into My Trading Room, and he's a really, really good technician that we have, comes in and he calls MACD divergence the most powerful signal in all of technical analysis. And so I kind of want to talk a little bit about what that is. And I actually see what I think might be MACD divergence on a chart. Okay, and so let's play with that a little bit. To do that, I'm going to play with the Metastock. I'll close the commentary for now. And what I'm going to do is actually draw a couple lines on this chart. What I see right here is, let's see, maybe not a divergence. Let's go ahead and draw a couple lines here. Generally, when we're looking for divergence, we're going to be looking from peaks to peaks. Okay, so if I would look at the MACD peak right here, here is the peak that we had. Well, actually, let's look at this one because he wants it to cross below 0 and then come back above, the way Dr. Elder says to look for these things. If I draw a line here from this peak to this peak in MACD, I'm going to tell you that MACD is slightly up over 62 periods. Okay, I would say that this level, the level of this MACD right here, is going up a little bit. This peak is slightly higher than this peak. Okay, if I do the same thing with this peak and this peak, I would say that this peak and this peak is lower than this peak, while this peak is higher than this peak. That's exactly what Dr. Elder calls a divergence. Okay, the words that he actually uses when he talks with us, or when he does classes with us, is he calls this a breaking the back of the bulls, and he calls it the most powerful signal in all of technical analysis. When this happens, it's a very, very, very big bearish sign. We are getting an increase in MACD that isn't being supported in price, and that's a bearish divergence. Anyway, so those are the three ways you look at MACD. You can look at the difference between MACD and the signal line. You can look to see if MACD is overbought or oversold, or you can look for MACD divergence on a chart. So those are the three different ways that you can look at MACD. Okay, and in that commentary, I'll just pop that open real quick. In that commentary, what you've got is you've got that crossover, you've got that overbought, oversold, and it'll look for all three of those things that I've talked to you. Okay. Again, I was really clear. Hopefully that now maybe you have a better understanding of MACD. If you do, let me know in the comments. But there are a lot of different patterns that are available. There's really, really specific reasons that I like technical analysis. It's completely objective. If you guys understand exactly why this is plotted, you're not going to come to a different conclusion than I am. We'll all look at yesterday's bar and go, that's a sell signal. It's objective. We're not trying to make decisions. Now, just like this buy signal didn't make money, this sell signal may not make money. It doesn't work all of the time, but does it work a majority of the time? Can we test that? Because it's objective, we can. We can actually say, how does MACD work? How well does it work on S&P 500? Like we could go back and do this manually. We could say, okay, we bought here, we sold here. We bought here, we sold here. And we can know exactly how many points. But since this is all 100% objective, we can actually go back and test it. One of the mistakes I made early in my career at Metastock a lot was talking about all of the indicators that are available in Metastock. And, it's very, very easy. It's a program that's very, very mature. We've been working on it since the 80s, right? It's 30 plus years old. It's actually been rated #1 for almost 30 years. Hopefully we get it again next year and have 30 years in a row. But there's so much that you can do in it. We've got hundreds of indicators. There's over 100 methodologies. And we talk to a lot of people that are new to trading that want to use technical analysis, and they just don't know where to start. one of the things that I would kind of encourage you to do as a new trader is to understand the indicators that you're using, but also to kind of understand the performance of the indicators. We just spent 31 minutes talking about MACD. Is it good for S&P? I don't know. It looks pretty good so far, right? But what I want to be able to do as somebody that has like all of these options is I want to understand how well they work. If I'm trading S&P, I want to understand how that works. If I'm trading Apple or Tesla or something and I want to kind of have a trading system, I don't want to necessarily, I could care less about Gerald Appel and his MACD. I hear it's a cool indicator, but how well does it perform on those indicators? And for that, since everything that we're dealing with is 100% objective, I can test that. I can say, okay, well, what works best? So what I'd like you to do, guys, to do is go ahead and type some symbols in, if you don't mind, and we will look at some of your stocks because we've looked at S&P. It's kind of ugly. I'm going to include it in the test, but I'm going to build out a system test to kind of evaluate what works well. So give me some stock symbols. I'll put them in here as we do the system test. So now the question I want to ask is, how does this MACD system work on S&P? How does it work compared to the turtle trading and some of the other systems that are available in Metastock? So I'm going to go ahead and do that. And we'll go ahead and do that against any symbols that you put in. Linda, thank you for PayPal, PYPL. Okay, so right here, I'm going to open up the Power Console Metastock. Here's the charting. Quote Center is a window you can look at that shows you all the quotes. We're not really going to play with it, but it is there. Scanner is awesome. I'll talk about Scanner in a minute. System Tester is where we're going next. So the System Tester is what allows me to go in and say, how well does this system work over time? And time being however much I want to test it against. What I'm going to do here is I'm going to go ahead and clear this out. And I think I have a favorites list. I do. Okay, I'm going to remove this one right here because it does not belong in this list. Yes. But what I've done, you can create your own system test. You can combine your own indicators. And if that's something that you want to do, it's actually really, really easy to do in Metastock. We're going to put PYPL in here for Linda. Tesla, because a lot of people like Tesla. Linda, thank you for the stock. Appreciate it. We'll do SPY. Actually, let's do SPY, not DPY. I will throw Ethereum in the, actually, let's do Bitcoin. BTC equals is the Reuters symbol for that. MCK, you got. What I want to do is actually just make sure I get the right instrument. So MCK. With Reuters, they have so many different, that I just want to make sure I grab the right one because look at all the different places McKesson trades. So we will throw that in there as well. Okay. Now, I want to be really, really specific for a minute here. I'm going to select all of these. I'm going to go to my favorites list here. And this is just a list that I built that has 109 systems. I know these are all built into Metastock. They include the MACD system, the Turtle Trader system, a bunch of performance systems, all of the systems that are included in Metastock that aren't optimized. Optimizing takes a little bit longer than I have to explain what optimizing is. So what we're going to do, and I could do this against like the whole S&P 500. I could do it against like all of the optional stocks, but I'm just going to test that against PayPal for Linda, MCK for Arthur, Bitcoin for me and Spider, and Tesla for, I don't know, John. Okay. And what I'm going to do is I can go back and I can say, well, if I took every single buy signal for the MACD or for whatever system that it's testing at the time, how well would that have worked? I'm going to take all the long signals. I'm going to try to take all the short trades. I'm going to take both of them. Okay. For this, I'm going to actually kind of narrow it down to about 500 daily records. That's about 2 years. So there's about 251 or 2 days. So it's just under 2 years. And what I'm going to do is I'm going to test this on a daily basis. So I'm going to test every time I get a buy signal, I'm going to buy. Every time I get a sell signal, I'm going to sell. And it's going to tell me historically how well these different methodologies would work. Okay. Under trade options, we won't spend a lot of time here simply because we don't have a lot of time. But I'm going to start with $10,000 of initial equity in my hypothetical test that we're going to do. And I'm going to basically, there's some options here. I can do number of units. I can do transaction cost. I'm going to bump this up to 50% of my equity. So when it tests, I'm going to have it take $1,000 or $10,000. It's going to trade that. This first trade is going to be $5,000 because that's half of 10,000. If it builds up the account to 20,000, it'll be 10,000. It's going to be half of whatever it has. If it goes down to $100, it'll only be trading $50 positions. So that's what we're going to test, half of our available equity. Okay. For broker, we're going to leave $0 commission since we don't pay for commissions here in the US anymore. And realistic market prices will wait until the end of the day to make sure you get, well, in the case of MACD, that buy or sell signal at the end of the day and not sometime during the day and it goes away after lunch or whatever. So it waits till the end of the day. What it does is, since I can't trade on the end of the day, it buys at the open of the next day. And we call that market close, or we call that realistic market prices. I actually go in and I'd like to look at my stocks about 15 minutes or 20 minutes before the close and make my decisions then, and then do them before the close. And so what you could do is actually take that delay out and just have it operate everything on the close. So I'm going to leave realistic on there because that's a default setting, but there are options that you can do. Okay. You can also put in some slippage if you want to. That just penalizes every single trade with the assumption that you're never going to get a super good feel. But we're going to go ahead and just kind of leave that at 0 as well. So I'm going to go ahead and click on OK. I just wanted to show you those trade options. I'm going to go ahead and start the system test. It's going to run through right now, if you can see, 1,080 tests. So there's 109 systems selected. There was 5 or 6 symbols that we put in there. In total, it's going to run thousands of tests. And there was one that had optimization in there. I saw it, but it's already 36% done. Just to reiterate what it's doing, because the idea here is I want to focus on the indicators and the methods that actually work. I would not encourage you to just take the best performing system and start trading with it. Because as we talked about at the top of the hour, discipline is really, really important. But what I want to do and what I would encourage you to do is focus on the methods that work. So if MACD works, great, learn about that. If there's another method, see, we just did turtle breakout. If you catched it in the thing, there's another method that works, use that instead. What we want to do is we want to focus on the trading methodologies that work. Okay. And in our basket, this is what we get when we test a bunch of stocks against a bunch of systems. We get a bunch of green and red bars. The green bars are systems that were on profitable average. Sorry, let me say that slightly differently. They were on average, they were profitable on the systems, the stocks that we tested. And the red ones are systems that did not work in the market. We did about 2 years. Remember, that's like all of the bearish market and a lot of the final parts of the bullish market. And what I'm going to do here is I'm going to sort it based on average net profit. So if I'm looking here, I obviously, and I do find this, call this finding a system or a method that works for you, but none of these systems are going to be stuff that I want to learn about on these particular stocks. They just didn't work. I want to focus on the methodologies that did work. Okay. And a couple of them, and I want to kind of find the ones that kind of work well for me. And I'll explain what I mean by that as we go on. So if I'm looking at just the methodologies that work, if I want to learn about indicators that work, I'll kind of be focused on this side of the list and not this side of the list. Okay. Our best performing system over the last 2 years on those stocks that you helped me pick was 33%. Okay. With the best one, the best profit being about 15,000, the worst profit being about 2,000. Okay. Here we've got the ACT system. This is a system that was designed by John Ellers. How do I know that? Because I worked here 25 years, but I can also show you how to do it. It made about 33%. Here we have a moving average crossover system that netted about 25%. You kind of get the idea. Well, I do obviously want to focus on stuff that works well, right? But I also want to take a look here and see kind of what our average trades look like. I did about 2 years. So this one, our top performing system traded 66 times on average over 2 years, which is about 33 times a year, which is just under 3 per month, which is more than I want to trade. For me, I kind of like the systems that are a little bit slower. And for this one, this adaptive exponential moving average, it only took 24 trades. So that's 12 a year. That's 1 per month. I almost said 2 per month, but that was terrible math. I only do terrible math during demonstrations. So for this one, we're working a lot less harder. It wasn't quite as profitable, But it also wasn't quite as active. And it is about kind of finding a good fit for you. For me, I work very, very hard when I'm at work. I try to limit the time that I'm actually looking at trades because I could spend all day looking at the market, but I also have a job that I'm supposed to do, right? And so for me, something that's trading like about once a month on the stocks I'm interested in, this ACT adaptive exponential moving average, is probably going to be a better fit than something that's making just a little bit more for a whole lot more work. So you want to find something that's kind of comfortable for you. You've got also a pattern trading system right here. And but we'll go ahead and we'll stick with this adaptive exponential moving average. I'm going to go ahead and click on view with it. And now I'm going to have an idea of how well it works on the different stocks that we tested. If I would have done all S&P 500 stocks, all of them in the S&P 500, I'd have 500 right here. And the only reason I don't do that is because it takes a little bit of time to go through 500 stocks and take every trade on 100 systems. A little bit more time than I actually have. Speaking of which, I'm going to take a little clip. We're doing okay on time. Okay. Obviously, now I'm going to sort these on profitable. If I had done 500 stocks, I'd have a good idea of how well this method worked over 500 stocks. Over 5 stocks, it didn't work very well on McKesson at all. It lost money. It lost $1,900, about 20% over 2 years on McKesson. On the S&P 500, it netted minus $60, so it didn't work very well on that either. But on Tesla, it made 147%. It traded 21 times. 11 of those trades were betting the winning trades, and 10 were losing trades. We actually, this right here, this where it says average profit, average loss. This means for every dollar I lost, I would have made $4.39 on the other side. So if I'm looking to trade Tesla, this might be a really, really good one to trade. I'd say it underperformed on all of this, and that kind of makes me a little bit nervous. I like it to have a much more green when I'm looking at it, because this tells you, that just tells you that the stock's a little bit, or the method that you use, it's a little bit more universal, I guess is a good word for it, I suppose. Okay. If I want to get more information about Tesla though, okay, so 21 trades, 11, 10 losers, profit loss. These look all pretty good for me. If I wanted to learn more about kind of how this performed over the last 2 years on Tesla, I can view a full report here. And I'm not going to spend a lot of time on this report because, well, it's kind of boring to go through. I'm going to highlight a few things that that I'd like to kind of look at. Over 2 years, we would have made a performance of 147%, not dollars. If we would have bought and held Tesla over that time period, we would have actually made 116%. So our buy hold performance was about 30% better by taking trades on it. Okay. I like to look at this profit loss index that basically measures your total profit versus your total loss. It goes from plus 100 to minus 100, the way the index works. And obviously closer to plus 100 is best. 89 is good. Okay. Risk reward measures your total open position risk to your, or downside to your total reward. It's the same measurement. The closer to 100 is the better. Okay. So 96% is pretty good. Okay. In terms of trades, again, we took 21 of those. 11 of them were profitable. 6 of those were long positions. 5 of those were short positions. So we get an idea of the breakdown of how many times it's successful on the long side and the short side. Okay. Our biggest profit was $4,500. Our smallest profit was 60. Our average profit was about 1,600. So I did pretty well there. Our most consecutive trades, we had 5 winning trades in a row, which is great, but I don't care as much about that. We had 3 losing trades in a row, which I'm much more interested in. I can stomach a lot of winners in a row, but how many losers do I have to have before I get my next winner? This will give you an idea of that. And again, it's just, we're looking at historical data. It's not a crystal ball into what's going to happen next year. But with this particular one, had 3 losers in a row, the average loss being $384. So I can also look at all kinds of other things. Metastock has a huge help file. We used to print a manual. It was 700 pages. It talked about MACD, all the indicators, everything. But that whole melt file is still available for you. So if you want to dive deeper into any of the numbers that we're talking about here, you can click on help and it'll tell you what all these numbers are. Those are the ones I'm going to highlight. The last thing I want to show in this reporter is the equity line. So right here, this would be your equity. This is where you started at $10,000. Every time that kind of came down, that's a pullback or a drawdown. We can kind of see exactly how well that and how consistently that's performed. I like to have a little bit more consistency in an equity line than this. You're never going to have a perfect 45, but I just definitely don't want something that's all the way up to all the way down to all the way up to all the way down. I want to see something that kind of shows a bit of consistency trade over trade. So with this one, it's all right. Certainly, we don't see any huge drawdowns, which is what I certainly try to avoid. We also don't see any flat periods. So this system is always going to be either on or off. It's always going to be in the market, invested or not invested. And I prefer systems that have long periods of not being in the market as well, just for the reasons we talked about earlier. So, but with this one, this is pretty good. I'm really curious. I'm going to go back right here. And we're just going to go back, and MACD usually performs pretty well. This was our second best performing system. If we would have taken MACD, it would have made money. I think it would have had a 3% profit. So that's the reason we want to test something. This was obviously in what we're interested in, a far more profitable system. So let's go back into Tesla. And I do want to be really specific. I'm going to say this again. You should not use this as a way to skip your education. Discipline is important if you want to be a trader, but you should use this as a way to kind of shortcut your education. So if I'm looking to trade Tesla, this ACT adaptive EMA looks great. And so like what I want to do is I want to learn about what is in that system. And so what I'm going to do here is let's go ahead and open up Tesla. I'm going to go back to the chart here, TSLA. Look at the time. I'm doing okay still. Need to hurry a little bit, but not too much. I'm going to go back up to this guy in the bolo hat. I'm going to find that matching expert advisor because it's going to explain what's going to go on for me. So is Tesla going to load? I typed in the wrong symbol. TSLA.O. Okay. Let's type in the right symbol. That'll help. I want to go back. This is a daily chart. Let's kind of zoom in a little bit here. I'm going to attach the expert advisor for that ACT by Ehlers. Adaptive exponential moving average. We're going to go attach that. And now we can see where the buy signals would have come in. We would have got a buy, would have sold out here. That's actually really good. Here we would have got that sell signal. Okay. Here we would have got a sell signal. And so visually we can see where our gainers and losers are. We could have, and I should have actually attached the equity line here. We can see it over here. This sell signal, it could have been better. This buy signal is really good. So I want to take a look at these buy signals and make sure that it's something that I feel comfortable with. If it is, I can go back into this commentary. I can kind of see here. Okay. I'm going to go back to where this sell signal so I can show you what the sell, if it gave us any, I'm not familiar. The ACT systems that were created with John Ehlers are very, very good. But let's kind of talk about how we would figure out more about this. So we did get a sell here on April 5th, which would have been a good sell signal. Now it's just going to tell us about the system and who created it. So the adaptive exponential moving average is a trend following strategy based on the crossover of two different length ENAs. Because this trading strategy is always in the market, meaning you're either long or short, it's never out of the market. This property makes it a trading strategy that may have negative aspects for those that have high trading costs and fees. Okay. The adaptive moving averages are indicating a short trading opportunity. Traders following this strategy will want to exit all long positions and place an entry signal for the next day because it's looking at this day. Okay. Since there's no built-in protective stop, a trader may want to consider using stop losses. Actually, one of the things, and I won't show you just because of time, is if I want to go and retest this with stop losses, I can actually go in and say, okay, let's add a trailing stop. Here's the parameters I want to use. Let's add an inactivity stop. Let's add a gap stop. You check mark the stops that you want to add, you test it again, and you can get an idea of exactly how that works. So we know that this method is based on John Ehlers' work because it does say that in the commentary. One of the things about the ACT systems is they actually do have their own help files in Metastock. So if I come in here and I go to about Metastock, oh no, not there. If I go to come in here and I want to learn more about them, I can go to Metastock help. I can just search ACT, and there's going to be a lot of information on the Act. You can see all of them. And it's going to kind of talk about John Ehlers and the technologies that he uses to make moving averages adaptive, how those all work. You can read through that manual. It's very, very well put together. This is one of those add-ons that we've actually included with Metastock for a number of years now. And it's very, very cool. John Ehlers wrote 2 books. One was called Rocket Science for Traders, I believe. Now I'm just doing this off the top of my head. And I can't remember the second name of the book, but we have built these strategies. It's a very, very well-performing add-on. That's why it came up on the top of that system test. The last thing I want to show you, because I think I have 3 minutes now, is if I do really like this system and I want to be able to find opportunities for that system, you're going to go to the scanner for that. And I'm going to go ahead. I did a little bit of a different demo this morning in the same room. So I've been in here all day, but if I wanted to find that adaptive EMA, I can scan with the Reuters data that we have. We cover just about every market on Earth. But if I just wanted to scan the S&P 500, I can do that. I just started that. Actually, I just started a whole bunch of scans. It's going to come back, though, when it gets to that adaptive EMA, and just give me a list of the stocks that have either an actionable buy and sell signal. And for me, that's the best part of Metastock, because that's the part I use every single day. The system tester does a really, really good job of helping you understand what methods work. The expert advisor helps you understand them better. This scanner, after 25 years in a row, if I miss a day of running my scans, I actually regret it, because it's so helpful to just take out the garbage and just show me the stocks that have an opportunity today. So that's kind of what I have for you today. Again, it's been rated #1 for 29 years in a row. We have 2 platforms that we offer. I'm looking at the time. I'm going to just hurry through this a little bit. We have our real time. That's my alarm telling me to shut up. We have our real time, and it's $265 a month. That includes the Metastock, everything I've shown you today. It also includes a platform that Reuters put together when they were Reuters, we call it Zenith. They spent more than $1 billion. If you're interested in fundamentals and news, that's awesome. Like I said, they spent $1 billion on it. And it's covered by thousands of reporters and hundreds of news bureaus. It also includes any data that you're interested in almost anywhere in the world. We cover like 95, I think, % of the global market cap. It's insane the amount of data that's available through it. So $265 is the cost of that for a month. And it's what we call Metastock RT, or Metastock Real Time. Okay. We also have our Metastock DC, which is just our end of day platform. It'll do everything I showed you today, like scanning and testing and all that kind of stuff. It's only $69 per month. And that includes the data, that includes the platform, everything that you need to run it. What we're doing today, and I'm just going to go through this real quick, is we're going to give you an extended trial. So if you buy a month, we're going to give you a second and a third month for free. If you do that with DC, it's like $23 a month. That's it. To try what's been rated the best software in its price category for 3 decades now, almost 3 decades. That's a rounding of 1 year. All right, so that'll include 18. That'll include data. You can do that with either end of day or real time. With real time, it's less than $100 a month for that 3-month trial. So that includes Metastock 18. That includes the data for the region of your choice. We also include a training package called Unleash the Power of Metastock, which kind of walks through everything I've showed you today and a whole bunch more. And we also have what we call a white glove installation, where we'll actually have somebody call you, walk you through the program, help you install it, answer any questions you've got, and they'll put aside a 2-hour block for you to work hand in hand with somebody in that initial call. You also have unlimited access to our Utah-based. They're right over there. They do a great job, but you can always call and ask questions. So if you want to sign up for that, I'd encourage you. It's like $23 a month for 3 months. You know, you're going to be running this till September 14th. 800-882-3040 to sign up by phone. You can go to metastock.com/sales chat. You talk to one of our sales guys. You can also sign up online at metastock.com/medhead. I'm going to go learn how to talk in /madhedge 3-for-1. And there you go. That'll allow you to sign that up for that. The last thing I'll say is there's a reason it's been rated #1 29 years straight. Give it a go. It's a great software. I would not trade without it. And I think you'll enjoy it. I hope you enjoy it half as much as I do. But thanks for watching. I hope it was helpful. I hope you learned a little bit about MACD today. Anyway, that's what I've got.
All right, Jeff. Well, that was outstanding. And thank you very much for taking the time to give this presentation. You can never have enough trading tools. They can be crucial in determining whether you make or lose money in the markets.
Thanks for having me, John.
Yeah, well, it's been great, and look forward to having you again in September. So I will let you go, and I'm going to hand out the next batch of prizes to our winners.